One of my largest positions is Fairfax Financial, which is a insurance company in Canada, and the person who runs it is often referred to as the Warren Buffett of Canada. So I would be remiss if I didn't talk about it since it's one of my largest positions. But Berkshire Hathaway is an insurance company in Omaha. It's run by Warren Buffett, who's regarded as the greatest investor living by many people, and has many other companies besides insurance. It owns Geico, obviously. It owns railroad. It owns a lot of industrial companies. So it's more than just an insurance company. But in general, insurance companies tend to trade around their book value. And since this is run so well by such a great investor, this one trades at 1.6 times book value. So you're paying a premium because of great management that it has, and the market sort of recognizes the value in that. There's an American who people like to refer to as the um, next Warren Buffett, and I think he's the guy who puts it out there. And it's a company called Markel, which is in Richmond. And I'm not convinced this guy's the next Warren Buffett, but it trades also at a valuation. So rather than trading around book value, it's trading at almost 1.5 times book value. And it is an insurance company that does specialty insurance, and it also tries to do venture type investments like Berkshire does. But the wholly owned companies that it owns are not as good as Geico or Burlington Northern or Fruit of the Loom. They own some companies like a company that bread, I'm not kidding, and a company that provides the the plants in offices, like those office plants. There's actually a company that does that. They own it, so I'm not impressed. Uh, it's out there. So the company I like is Fairfax Financial. It's based in Toronto, and I've been to the annual meetings for Fairfax Financial just like I have for Berkshire. And if you have a choice to go to either, I would go. But Fairfax Financial, it's a lot smaller. So whereas 70,000 people might go to the Berkshire one, you probably get 2 or 3,000 at Fairfax Financial. So you'll get to meet more people close up. I actually got to meet Prem Watsa, who is the Warren Buffett of Canada, and a couple of other billionaires while I was there, just walking around. And you probably won't have that opportunity in Omaha if you go to the Berkshire annual meeting. But a wonderful company. I've owned it for a while. If you can see, I started buying in 2017, and those shares did okay for a while. It was trading way below its book value, and I thought it was undervalued because some people weren't happy with some of the things the chairman was doing. But as you can see, as I kept adding, and then during the pandemic, those shares did really well. So, you know, let's see, yeah, 300, 400% for the shares that I bought during 2020, 300%, 400%. So this did really well, and I think it has room to run. One of the things they did is they bought a company called Atlas Corp, which is a shipping company that does container ships. And I own shares in Atlas, and I was not happy that it got sold to Fairfax, but I also own Fairfax, so I'll do okay. But Atlas was very well run, and it's run by the person who was supposed to be the successor to Warren Buffett, and he Berkshire Hathaway, and he was running this company, Atlas Corp, and this company was bought by um, Fairfax and some other investors. So they own a big part of that. They own the insurance, and a lot of what they do is traditional Ben Graham type value investment. So it's something that not everyone is a fan of, but Prem Watsa is a great manager and a great investor and a great insurance operator. So you can tell how good an insurance company is by how well they have something called the combined ratio. So generally, insurance companies try to break even, the amount of money they take in and the amount they pay out, and they get to use that money for a few years. They call that the float. And if you invest that profitable investments on it, then it ends up being a good deal. And since Warren Buffett's such a great investor, he did really good with that. And Prem is no slouch either, and he's done really well with the float. And they have a particularly good sense for timing the bond markets. So part of the reason that the stock was trading for below book value for years is that he had the opposite problem of Silicon Valley Bank. So Silicon Valley Bank had a bunch of deposits that weren't making a lot of money, so they would put them in longer dated um, fixed income things, and then when interest rates dropped, the value of those assets dropped, and Silicon Valley Bank became insolvent and had to get bailed out. So for years, Fairfax was penalized because they were keeping their fixed income assets in very short duration instruments like treasuries, and he did not want to put them in longer duration treasuries. And he would say on the conference call, "I'm not going to lock things up for 7 or 8 years to get 1% extra or 1.5% extra." And that ended up being a really good call because when interest rates dropped, all those assets that in very short duration, he rolled them over into longer duration assets. And so just by that one move for the next 3 years, they're going to be getting an additional 1.5 billion in income from the fixed income portfolio, 1.5 billion each of the next 3 years because he locked it in at the perfect time. And after he locked it in, that's when interest rates started to fall again. So interest rates are falling now. So the timing on that was impeccable. And it's a well-run insurance company, as I said. And if we look at the past 5 years, you'd be up 200%. It pays a nice dividend, 1%. And I'm mentioning it now because earnings is coming out tomorrow, February 13th. And I think it's still got some room to go. I'm not adding here because it's such a big position for me and I'm actually selling things. But as far as owning it for several years, I think you would be fine with this. And this isn't a recommendation to buy or sell. This is just me walking through my process. I'm happy to have owned this since 2017, and I'm happy to own it for longer. And trading at a trailing PE of 8.5 when the rest of the S&P 500 is trading at, I think it's like 22 or 23. And this is not part of the S&P 500, but I'm just illustrating you can find relative bargains out there that are safe and well run versus chasing things like Enphase or Tesla or sorry, not Enphase, Nvidia or Tesla or some of the meme stocks like MicroStrategy. You can find safe things that are growing steadily and are a good risk reward payoff. You're not going to do 200% in a year, but you also probably uh, will just slow and steadily compound as long as they keep doing what they have been doing for the past 30 or 40 years, you'll be fine. So that's my thoughts on Fairfax Financial. I'm not going to go in as deep on this as I usually do on the other stocks because I'm on vacation. And once again, this isn't a recommendation for you to buy or sell this. This is just me walking through my process and what I saw in this when I first invested in it and what I see in it now and why I'm still holding it. And I'm going to continue to hold it until things change. But this is one to look at that's sort of off the beaten path because it's a Canadian company. People don't usually look at Canadian companies, and this has a Canadian ticker. So if you're trading this in your U.S. account, you want to use this ticker instead of the Canadian one. I believe the Canadian one is FFH, and the one that you would use in your U.S. brokerage accounts is FRFHF. But this is very illiquid, so do not put in a market order. If you put in an order for this, you put in a limit order. And I'm not telling you to buy it. I'm not telling you to sell it. I'm just warning you that if you do decide to buy some, put a limit order where you decide the price because the Canadian shares are very liquid, but the US traded shares are not. So if you put in a market order, you might be paying a much higher price than you thought. So definitely use a limit order to dictate the price that you're going to pay if you decide to look into this. And if you have any thoughts on this, whether it's a good idea, a bad idea, just leave it in the comments. Thanks. Have a great day.